welcome to Nestegg's monthly ETF update, powered by ETF Securities. We're joined here by Kanish Chugh from ETF Securities. How are you going?
Not too bad, how are you?
Yeah, no, I'm great. So we'll just get straight into it then. How did the ETF market go in May?
So ETF market had another positive month. So we saw the ETF market current size, it sits at around 38.2 billion, which was a growth from April of about 1.41%. So in terms of net flows, it was roughly around $343 million in net inflows over the month of May.
So which ETFs had the biggest inflows and outflows?
So in terms of the biggest inflows for the month of May, it was the BetaShares AAA cash product, close to $100 million of inflows. And in terms of outflows, it was actually, again, a BetaShares Australian Equity Resources ETF, QRE, which had close to $61 million in outflows, followed closely by the SPDR STW ETF, which is still the largest ETF in the market, I might add.
And which were the best and worst performing ones this month? It's one that everyone wants to know.
Yeah, no, exactly right. Yeah, so the best performing ETFs in the market, so we had the top two were iShares products and focusing on small cap US equities. So we had the iShares Russell 2000 ETF, and then coming to third place was ETF Securities Morningstar Global Technology ETF, TECH, had 5.4% growth over the month of May. In terms of worst performers, the iShares Telecommunications ETF was the worst performing ETF in the market, followed by the iShares Singapore and South Korean ETFs, which, given some of the events that happened during the month of May, was fairly justified.
Yeah, and telecommunications as well.
Exactly right, yes.
Yeah. What ETFs have we seen launched in May?
The current market size is 182 products, the ETF size in terms of number of ETFs that are available. Two new products were launched in the month of May. So BetaShares launched an A200 ETF, which focuses on the ASX 200 index, but it's actually the lowest cost Australian equity ETF around the world at 7 basis points. So it's a bit of a game changer for the market here. And then there was a active ETF, another Australian equity product launched by Perennial. So again, another active manager coming into the market with a listed ETF form as well. But interestingly, we actually saw Russell close one of their ETFs early in May, and iShares recently announced that they were going to be closing 5 of their funds as well. So there's a sense that the ETF market is starting to mature in terms of you're reaching a point where you are starting to see funds closing, and maybe sometimes we will see going forward more funds closing than we will see opening, but there'll be a bit of time before we get to that stage.
Splitting off into a bit of current affairs territory here, what impact do you see the Royal Commission having on the ETF market?
Look, I think it's only going to be a positive for the ETF market. When we look at the ETF providers in Australia, there is no ETF provider that is aligned to one of the banks. So we're not institutionally aligned, we're all independent. So whether it's us as ETF Securities, BetaShares, Van Eck, iShares, Vanguard, State Street, it's all going to be a fairly positive outcome, I feel, because ETFs are transparent. We are passive products. We track an underlying benchmark. We outline what that benchmark is to clients, and investors can even see the underlying holdings within our products, and they're generally low cost as well. So if anything's going to be coming out of the Royal Commission in regards to the ETF market, I think we'll have to talk to advisors to, for clients' best interest, is it worthwhile looking at potentially passive ETFs and passive low cost products in comparison to active managers that may be underperforming their benchmarks and also charging a significant high fee for what they're trying to achieve.
Upping the stakes even higher now, and it's happening as we speak actually, the US North Korea summit. I mean, I assume it's going well because we're still here.
Yes, exactly.
But are there any ETFs you think we should be keeping an eye on given this event?
Look, I think depending upon your view around how the summit will go, we had one, there was a South Korean specific country ETF in the US that had seen significant outflows on Friday, which is sort of pre-summit. And that particular view is taken by an institutional investor most likely because volumes in that product were fairly low. So we believe that it could be 1 or 2 big institutional investors. So they're obviously quite negative around how the summit will play out for the Korean market. And when Trump cancelled the summit back in 24th of May, you saw the Korean market sort of dive, you saw the US market crash as well. So that's depending upon how your view is. One thing I would say, safe haven assets is normally a good place to be during times of geopolitical tension. So things like physical gold, physical silver, US dollar, even the yen could be a good safe haven play as well. And then in terms of if you're wanting to play a bit and sort of see how the market goes, taking country-specific tilts. And that's normally what you see, ways in which to take advantage of geopolitical events, is taking country-specific or region-specific tilts. So emerging markets or broad Asian equity ETFs that may have a larger allocation to South Korea, for example, could be an interesting way to play.
No, it's definitely a big moment in history.
It is, yeah, and I think there's a lot of key events happening around the world with Europe, within the US, now with Asia as well. So it's going to be interesting to see how the investor landscape sort of unfolds.
Yeah, plenty for me to write about, which is great.
And hopefully plenty for us to talk about as well.
Yeah, well, look, on that note, that's everything we wanted to talk about today, Kanish. Thanks for coming in.
No, thanks for having me.
And that's it for this month. Tune in next time for Nestegg's monthly ETF update powered by ETF Securities. See you later.